Before we get started, just a quick disclaimer. Any information expressed in this PowerPoint does not purport to be any financial, tax, or legal advice, as we've not considered any of your or your client's financial or tax objectives that are specific to you or your client's circumstances. While if it has been taken to make sure the information is as accurate and relevant as possible, it is at best construed as general information on how to use class software. You shouldn't rely on the information provided as advice and instead seek your own independent advice from appropriately qualified practitioners or conduct your own research. No warranties given as to its accuracy and relevance, and persons who rely on this information do so at their own risk. Information may also become obsolete as the product evolves and features change. My name is Yvonne, and I will be your presenter today. With me, I have a few panelists that will be helping with answering any questions you might have throughout the session, and they are Helen, Nancy, and Yao. Please note, a Q&A box is available for you to ask any questions you might have throughout the session, and a summary of those questions and answers, as well as a copy of the slide deck, will be forwarded to all registrants within the next few days. A recording of the webinar will also be made available on class education page under recorded webinars. So on today's agenda, we'll be covering the following: how to set up a property account and load the opening balances. We'll also go through processing a property purchase, and I'll show you how you can set up an LRBA account and configure that to your property. We'll touch base on depreciation. We'll process some rental income transactions. I'll show you as well how you can request property valuations on class. We'll go through processing a property sale, and we'll wrap it up with a crowd favorite with processing across financial years. So first up, we have setting up a property account. Before we begin processing the property, we first need to activate the property account. So we want to start on fund level. We want to go to investments and then select property, because that's the type of account that you'll be setting up. I'll show you now what that looks like in a fund. Alrighty. So we want to start on fund level. And we want to go to investments and click on property, because that's the type of account we'll be setting up today. And when this window appears, we want to complete all the fields relevant. So we'll start off with the code. This is usually, this is a free text field. So you just want to use a code that is unique within the fund. Next up, we have the description. You can use the property address. Example, I'll call it activate. In my case, I'll be setting up a residential property, so I'll leave that as a residential. But if you are setting up a commercial property, you can select that from the drop-down menu. As we know with commercial properties, you do need to make sure that your fund is registered for GST. So just make sure that your fund policy has been updated to show that the fund has been registered for GST, and then select commercial as your property type when you come back to activate your account. You also just want to make sure that the attracts GST has been set to attracts GST if you're setting up a commercial property. So because mine's residential, I'll leave it at that. At this point, you can also mark your property if it is registered for land tax by ticking this box here. Alrighty. Next up, we have the property address details. I'll go into a bit more detail later, but when you're completing this field in the property account, you want to make sure that you have the address verified with RP data. And this is important because it basically allows you to request an automated valuation on class. So I'm going to start typing in my property address. I'll select it from the drop-down menu here. And you'll see the status, the verification status is now updated to verified with RP data, which is a good sign. And it means later on, I can come back and request an automated valuation. Now, the reporting category should update according to whatever property type you select, but it's always worthwhile just double checking that it is showing the correct type of property. So in my case, it is a residential property, but if you had a commercial property, for example, you just want to make sure that this section records it as Australian non-residential real property. Once you're happy with that, you can then activate your account. And that's my property account activated. Okay. Okay, now that we've activated our property account, we want to record the balances. And there are 3 ways that you can do this in class. The first 2 are for an existing property, And the first one is loading the opening balances directly to the fund using the opening balances screen. So to get there, you want to start on fund level. You want to click on fund and then load opening balances. Here, you'll see a summary of all of the active investments that the fund holds, and you just want to locate where the property is. When you find the property account, you can then add your purchase parcel. So this is what the purchase parcel will look like. You can record the CGT date of the property, the quantity, and then the book cost. You can also add any depreciable items that you might have as adjustments to your purchase parcel. I just want to emphasize that any depreciable items you have will need to be added as adjustments. So you want to add it using this little arrow here where it's got adjustments, and you can add your items. You don't want to be adding it as a new unit parcel because that will cause some issues later when you try to sell your property. So while we're on the topic of depreciable items, I just want to draw your attention to this field here that I've highlighted in green. So these are some of the adjustment types that you can add to your that you can add for any items that you need to add to your purchase parcel. You'll notice that the descriptions are quite detailed. And that's just because within the last quarter, our product and development team have worked to implement a number of enhancements to assist with property processing. As well as the detailed descriptions, our team have also introduced some validation messaging when we're loading the parcels. And what that is basically if you're selecting an adjustment type, for example, you've selected accumulated depreciation for Division 40, you select that from your adjustment type and then you input the amount. If that amount is, say, a positive figure, but it should be entered as a negative figure, before you can submit your parcel, the system will tell you that it won't accept that figure. Same as if you tried to load a Division 43 and in the amount you've input a negative figure, before you can submit your parcel, the system will give you a validation message just to let you know that it won't accept the figure that you've input. I've also included in this slide just a screenshot of how you can enter those figures as adjustment to your purchase parcel. So for accumulated depreciation Div 40, you want to enter that as a negative figure. For Div 43, you want to enter that as a positive figure. Now, the second method you can use to loading your property opening balance is using an Excel loader. In the screenshot, I've included the terminology on the Excel loader and what these translate to in your opening balance screen. So if you're completing your fund loader manually, you just need to make sure you're loading your figures to the relevant field. The loader adjustment fields, although they are recorded with these heading on the right-hand side, when you submit your loader to class, the system will map them to the adjustments in that menu screen I showed you earlier. So for first element, as long as you're loading it with a negative amount, it will map to accumulated depreciation, capital allowances, for example. I'll show you now what that looks like in an Excel fund loader that I've prepared. So when you're completing the Excel fund loader, there's a few tabs for property that you'll need to be mindful of when you're completing it. So the first up is property tab. Here you'll record the account code, the account description, which you can pop in as the address if that's easier for you. You'll record whether or not it's a commercial property, if it's registered for land tax, and then the most important is the address line. The next tab you want to be completing is your acquisitions tab. In this tab, you'll be recording the actual purchase parcel. So it'll pick up the account code from your property tab. You'll input what the CGT date is, the quantity of the property, which should be 1, the book cost, and then a description of your choice. If it was just the purchase parcel, maybe it's a newly acquired property. Maybe you don't have any depreciable items you want to add, but say you do, you'll add these in your adjustments tab. So I mentioned earlier that the wording is slightly different, but if you're loading, say for example, accumulated depreciation for Division 40, you want to select that from the drop-down menu. Input whatever your figure is, and this will then, when you submit it, it will map it to green. Okay. Now, the third and final method for bringing in a property balance is for newly acquired properties, and this is through a property purchase, which brings us to the next item on our agenda, which is processing a property purchase. I'll also go through setting up an LRBA account and how you can configure this to your property account. So when you're processing a property purchase, there are 2 business events required, and these are your property purchase deposit event and your property purchase settlement event. Now, both of these events are required because they each serve a specific purpose. Your purchase deposit event, what this does is it takes up an accrual of the full property purchase and it will bring in the property quantity. If no deposit was paid, you still need to process a deposit event. You'll just process it for nil value because you'll need to then make sure that the remaining amount is complete. Now, when you're processing your purchase deposit event, the remaining amount that you enter in this business event will be what flows through to your property purchase settlement event. So it's very important that when you're completing your deposit event, you're getting the correct remaining amount in there, because later on, when you try to process your settlement event, that'll be what flows through. The settlement event, on the other hand, the purpose of this event is to clear the accrual and allows you to enter any additional disbursements and any expenses that you might have paid at settlement and to capitalize any of those expenses. In your settlement event as well, you can't make any changes to the remaining amount from this screen. It's essentially locked. So if you find you've made a mistake in your settlement event, or you notice that the remaining amount isn't quite correct, go back to your deposit event and you want to fix it up in that screen because you won't be able to edit it in your settlement event. So in here, I've just included the summary of the steps of processing those events. We've got the property purchase deposit. So you want to go to transactions, investment buy, and process your deposit event. In here, I've also included the steps for our property purchase settlement event. So you want to go to transactions, investment buy as well, and process the purchase settlement. I'll also take this opportunity to let you know that when you're processing your purchase settlement, you won't be able to actually submit the business event or continue processing until you have a deposit event present. So if you haven't processed your deposit event, again, go back, process your deposit event, and then you can process your settlement event. The same is true with a sale. So if you're processing a property disposal, but I'll go through in further detail when we get up to disposing a property. Okay, now moving on to setting up an LRBA account. Including the slide of the steps to creating your account, you want to first activate the LRBA account and configure it, and then you can configure it to your property account. I'll also note that our recommended method tells you to set up a bank account. If your firm is using custom holding accounts, you can absolutely continue to use custom holding accounts. This is just our recommended method. I'll go ahead and show you now how to process a property purchase in class and set up your LRBA account and then configuring that to your property. But before we get stuck into our demonstration, here is where I'll be working off. Here are the figures that I'll be working off in our example. So today we'll be purchasing a commercial property. And up here, you'll see the property address. We've got a contract date of 1 July 2021. And this is a miracle property because it also happens to have settled the next day. So we've got a purchase price of $550,000 with our deposit amount of $55,000 and our remaining amount, which is just the difference between the two. Now, because this is a commercial property, we do have some GST considerations, which this statement has nicely split out for us. So we've got a GST in deposit of $5,000, GST in our remaining amount of $45,000. So as well as that, we've got some council rates that we'll need to pick up in our disbursements, some water rates, some stamp duty and legal fees that we've paid. And then there's a discharge of mortgage or some title fees down here at 138. So when we're processing our settlement event, this is the figure that we want to see on our settlement event. Okay, let's get stuck into our demo. So starting again on fund level, in the interest of time, I have already activated the commercial property account and I've also processed the business events, but I'll show you quickly, I'll highlight the key points to those business events. So as I mentioned, the first event we want to work on is our purchase deposit. And to get there, we want to go to transactions. And because it's an investment purchase, we want to go to investment buy. And then the first event will be a property purchase deposit. So this is what it looks like when you're processing your deposit event. You want to select your property account, input your contract date, put in the deposit, and then whatever the remaining amount is. The system will also do some calculations. So if it's registered for GST, it will automatically calculate the GST when you click the calc button. It will also pick up what the total purchase price is according to your remaining amount and deposit figure. So I'll show you now what that looks like in my business event that I've prepared. Okay. So you'll see I've selected my property account up here. It's a commercial property, so I've called it that. Our contract date is 1 July 2021. When we're working with the figures in here, it's always the gross value that you want to be using. So our deposit inclusive of GST was 55,000, and the system has split out the GST in that amount. The remaining amount is 495,000, and it's also split out the GST on that figure. It has also then totaled our GST over here, and we can see that it's summed up our purchase price. You can also see down here the property type, which is correct. My fund is registered for GST because I'm processing commercial property. My property type has been set to commercial and it does attract GST. So once you're happy with that, you can now submit your business event. Now, because we've got our deposit event present, we want to then work on our settlement event. Now, to get to that, we want to go to transactions, investment by, again, because it is a purchase, and then we'll select property purchase settlement. So I'll show you briefly what it looks like because we've completed our deposit event. When you come to process your settlement event, if you select your property account, it should flow through what information you've completed in your deposit into your settlement event. And I mentioned earlier in the slides that it flows through for the remaining amount and you can't make any adjustments to this. So I'm just trying to type in figures. It won't make any changes. If you've made a mistake, go back to your deposit event, fix it up there, and then it'll flow through and updated on your settlement event. I'll go ahead and show you now my pre-prepared event, what that looks like. So we've got our settlement event here. It's picked up our contract date. It's picked up our remaining amount. All I needed to do was input the settlement date, which was the next date after. It's calculated as well the purchase price, and it's brought in the total GST for this whole transaction. I mentioned earlier we had some expenses that we need to pick up in the disbursements, so I've gone ahead and added those here. But to do that, you just want to click on this add button, and it will bring up a line for each expense, water rates, title fees, etc. You'll notice for the title fees, this has been put in as a negative figure. And the reason for this is because as part of a purchase, if it's paid by somebody else or the super fund hasn't paid it, then you'll put it as a negative figure because the super fund hasn't paid it. Anything the super fund has paid, you put that in as a positive figure. You can also take this opportunity now to capitalize any expenses that you need to. As part of this example, I will be capitalizing my stamp duty. So I'm quite happy with that. It matches the figures in my settlement statement. The settlement amount is accurate too. So I'm going to go ahead and submit that event. And now I can match that off to my cash. So with my deposit, that was paid, match that off. Some of these expenses for my settlement were paid in separate transactions, but the total of these sum up to the amount due on settlement, which I've paid. Match that off. And that was me purchasing my property. I'll go through now setting up an LRBA account and configuring that to your property account. So we want to first get started with investments, and the type of account is bank account. I mentioned earlier, if you're using custom holding accounts, continue to do that. It's totally okay. Okay, so in your code, this is a free text field, so pop in anything that you'd like as long as it's unique to the fund. Your display name is what will be what appears on your reporting when you run. So I'm just going to call this LRBA account. If you don't know what the BSV and account number are just yet, you can leave that blank. The system will accept that. The most important field here that we want to look at is the linked to holding account ID. So this is where you'll configure this particular account to your property account. So my property account happens to be called LRBA Setup at Property Valuation. I'm going to go ahead and link that now. Next, we want to set the asset classification. So in this field, we want to change the GL classification because it is a limited recourse borrowing arrangement. So we want to set that to LRBA. In our tax return classification, we want to change this to borrowings LRBA. And then we also want to change the market type to be property direct market. Okay, once that's done, you can activate your LRBA account. That is your LRBA account done, but there's still one more step, and that is to change your property account to show that it is an LRBA property. So I'll go to my Browse Holding screen via Investments Browse Holding account, and I'll set this to property so it's easy to see. But my property account here is called LRBA setup and property valuations. I'm going to click on that and view the details. So I can make changes to this account. I'll have to click on edit. And then the field that I want to work on is the reporting category. So I'll scroll down, tick this box here, and I want to be changing the property account in the tax return classification because it is an LRBA property. So I'll select LRBA Australian residential real property because my property type is also residential. So I'll save that now and close. I'll just go back to my fun dashboard. Okay, and that is it for processing a property purchase and setting up an LRBA account. So following the general life cycle of property, next up, we can start processing depreciation. So in class depreciation, I want to emphasize that these methods are not interchangeable. So when you've elected to use one method, you can't swap and change and use the other method. So if you've opted to use a depreciation worksheet at the time that the property was purchased, later on, you can't change and start using the manual depreciation transactions. So the first and recommended method is our depreciation worksheet. The great thing about the worksheet is that it automatically calculates your CA and CWD each year once you've set it up. The worksheet itself can also be easily rolled forward, so you're not manually creating a worksheet each financial year for those fixed assets. The system will do it for you when you close the financial year. You can also easily add and remove any fixed assets from your worksheet, and it tends to simplify the CGT calculation when the disposal is processed because if you've got some fixed assets, it'll separate them out into their own line items and then show how the proceeds have applied to the cost. When using the depreciation worksheet, something I want to note is that class currently only provides a tax deduction treatment for Division 43, otherwise known as your capital works deductions. So if you've processed Division 43 and you're using a depreciation worksheet, don't be alarmed if you view your P&L and that is not there. It will pick up in your tax return. I also just want to point out this little manual depreciation override feature that the worksheet has got. So if you've sourced maybe a depreciation schedule from a quantity surveyor with a pre-calculated figure, and you don't want to use the system's automatically calculated figure, you can tick this box, override whatever it is, input whatever figure you've received from your report. Now, the other method is manual depreciation, and as the name suggests, manual. It requires you to manually up like the depreciation worksheet does, and it's probably most useful for properties that will be held for a short period of time. Maybe you're only going to hold the property for 1 year, so you'll process those transactions manually for the year. You can post the CWD transactions with manual depreciation to your P&L. So a lot of the confusion comes from the fact that when you're processing manual depreciation, people will see the CWD on their P&L, but then if they're using a depreciation worksheet, they won't see it there. So it does work for manual depreciation. Now, while we're on the topic of depreciation, I just want to touch base on some pain points that have been identified from yourselves as users of class and us as in the support team, some queries that we received. And those two common errors and pain points are the residual book cost and recognition of accumulated depreciation. Now, the two are quite closely related. One is usually the cause of the other one. So for context, the cause of the residual book cost is because the sum of your fixed assets are either overstated or understated in comparison to your total book cost. Some reasons you might find this is because or your fixed assets don't equal to your cost is because maybe you've processed a capital improvement, but you've forgotten to add it to your worksheet. Historically, one of the most common reasons was due to changing between manual depreciation and then using the depreciation worksheet, or maybe you had an active worksheet and you've gone and processed a manual depreciation transaction. Another common cause was changing the type of depreciation across years. So maybe in 1 year you set up an item as like a capital allowance, and then in the next year you realize you made a mistake, so you've changed it to a CWD or capital works deduction, or you've removed it altogether as an NA item. All of these may result in residual book cost and subsequently recognition of accumulated depreciation. So to kind of tackle these issues and remedy these, our product and development team have implemented a few enhancements. So first up, with the capital improvement transaction, after you submit your business event, you'll be met with an orange message to remind you to add the investment to your depreciation worksheet if you have one active. So after you click submit, a little orange window will appear and tell you to add this investment if you have one active depreciation worksheet active. Next is the ability to use manual depreciation while an active worksheet is in place. So this feature has been disabled altogether. You might notice that if you're using an active worksheet and you try to process a manual depreciation expense, there'll be a red warning message to tell you that you have an active worksheet, so you can't actually use it. The submit button will also be gone entirely, so you can't process that business event. Another enhancement we've introduced is if you try to change the depreciation type of an existing fixed asset in your worksheet. So if you try to change it from CA perhaps to CWD, you can't. Again, this feature has been disabled altogether. So you'll notice that if you come back in the next year or something and you try to change whatever the type is, you'll see that the depreciation type has been grayed out. So when you try to edit, you won't be able to. And finally, if you have a residual book cost at all, when you're running your period update, you'll be met with a warning message to let you know to review and perhaps fix that up before you close your financial year and finish up your activities for wrapping up. So all of these have been implemented to help with processing your property correctly at the start, and just to avoid, later on having to get some workarounds when you're closing your years because you've got something carried on. So with my property I purchased earlier, because I will be using the depreciation worksheet, I'll go ahead and show you how you can add that. So I want to go to investments, click on depreciation worksheet, and I want to locate the property that I've just purchased. So the system will split this out like this, according to the events that you've processed, and it saves you a bit of time from having to manually process the events. So we just want to click on create new. And here the system has picked up all of the details according to my business events that I've processed. So I'm just going to set this to an A, and I'll save. If you recall, in my settlement event, I also capitalized my legal fees or my stamp duty. So I'll add that as well and click save. And I'm quite happy with that. Now, I mentioned earlier that if you try to change the depreciation type once you've set it already, I'll show you what that looks like, that the field is now grayed out. So there it is. I've set it to capital allowance when I first set it up. But if I come back and I try to change it to say CWB or NA, that feature has been disabled altogether. I also mentioned that when you're processing or you have an active depreciation worksheet in place and you try to process a manual transaction. So if I try to process a depreciation event now for manual depreciation, select my property account, type in a figure here. I can't even input the amount. The system will give me the error message, and you'll notice that the submit button is gone. So that's just to avoid having that residual book cost and accumulated depreciation figure. The last enhancement as well was when you're processing capital improvement. So if I process investment by property capital improvement, I select my account. Let's say it's $400. When I submit my event, a little warning message will appear for me to add this to my depreciation worksheet if I'm using one. I am using one, so I'm going to go ahead now, refresh my worksheet, and I'll add that to my worksheet. And save. Okie doke. And these are just some of the enhancements that we've introduced. And again, it's just to help you out as users to get your property set up at the start correctly so that you're not having to, fix that up later down the track. So where your property is receiving rental income, you can process this in class using the rental income business events. You'll just go to transactions, select fund income, and then select rental statement as the type. I've included our help article with the steps that go into detail on how to do this, but I'll show you quickly what that looks like on class. So if I bring my fund back up again, I'll go to transactions, fund income, and then select rental statement. From here, I'll select my property account, input what the date range is. Okay. And I'll put in my amount. Again, this is the gross figure, including your GST. And then you can input any expenses here. So maybe you've got some agent fees or something like that. But while we're looking at the expenses, I just want to note that there is one particular expense here called property capital improvement. Now, when you're using property capital improvement in the rental statement, this will not generate a new item for you to add to your worksheet. So if you're intending on adding a depreciable item to your worksheet, make sure, or a new fixed asset to your worksheet, make sure that you're adding it using the transactions, investment by, property capital improvement business event, rather than through the rental statement. That will just flow through to your financials as property capital improvement as part of your rental statement. So just be mindful of that if you do have some items that you want to be adding here. Process that using transactions, investment by, and property capital improvement. Okie doke. So assuming now we've processed our daily transactions and we're ready to prepare the fund for year end, one of the steps we must complete is revaluing our investments. And in this case, we'll be revaluing our property account. So in class, there are two ways that you can value properties. The first is using automated valuations, which are available for residential properties only at the moment. And to use these automated valuations, I mentioned earlier that when you're activating your property account, that the address needs to be verified with RP data. So before you try requesting your valuation, just double check that the status is verified to request evaluation, or you're met with an error message, but you were able to request evaluation in the previous year. You might just need to revalidate your address. So go back to your investment screen, click on edit, and then type in your address again. Make sure it pops up when you in the suggested menu options, and then select your address, and then have it update to verified with RP data. Now, with the automated valuations, you do have up to 3 free valuations per fund. So if a fund has more than 3 residential properties and you'd like a valuation for the fourth, or however many more the super fund has, you can reach out to the support team to request additional valuations for you. I'd also like to mention now that we are working on automated valuations for commercial properties soon. So please keep an eye out for this. At the moment, it's just residential, but we're working on commercial. Now, the other method available for valuations is your manual valuation method. And you can use this if you don't want to use the automated method. You just need to create a new line for your manual valuation and complete the details according to your report, or wherever you sourced your valuation report from. I'll go ahead and show you now what requesting the valuation looks like in class. So I'm going to go back to my fund. I'll go to browse holding account so it's easy to see, and I'll group by property. And this is my property that I want to request a valuation for. So I'll click on here, and then I want to go to property valuations. But before doing that, just double check verification status. Yes, it has been verified with RP data, so I can request an automated valuation. Now, when you open that automated valuation screen or property valuation screen, it will bring up a summary of the property address up here, and the financial years that you can you want to click on this button here. The system will start working. And what it'll do is it'll bring up this window with the property details. So take this opportunity as well now just to review that the system has your bathrooms, bedrooms, car spaces, etc., all up to date. It'll also just include a picture of your property. Once you're happy with the details here, you can then request your automated valuation. So this will take a couple minutes, but it will try to request it now from our provider. But if you have any details that you need to be updating for the property account, you can go ahead and send that through to support team to have updated with our with RP data. Okay, so this is what a response to the automated valuations looks like. I've got a property valuation for 1.39 million with medium confidence. So we've got here this reliance indicator to tell you how confident the valuation is. There's also a field here where you can input the effective date. Now, with the automated valuations, you can't actually backdate the valuation date. These tend to happen in real time. So something that you might find helpful is maybe setting yourself a calendar reminder. So if you know that you need to be requesting or you need up-to-date valuations for your properties when it comes to preparing your year end, maybe set a calendar reminder to let you know on this date you'll request the property valuations, that it's applicable for whatever financial year that you're working on. So in my case, I'm quite happy with the valuation I'm provided. So I'm going to change the effective date and I want it to be applicable for 2024 financial year. Something handy that this valuation comes with is just a PDF summary of those details. So maybe you can include this in your work papers or something, or just have it stored in the fund documents. If you're happy with your valuation, you can then approve. But if you're not quite happy with that, it's medium confidence. Maybe that figure doesn't look quite right. You can also reject or delete the valuation. I'm quite happy with it being 1.39 million, so I'm going to go ahead and approve that now and confirm yes. Okay, so that's been saved successfully and you'll see it update on the financial year that you've set it for. Now I'll show you what adding a manual valuation looks like. We want to click on new and then we want to complete the window here. So maybe I've sourced my valuation from trustee. It's approved and maybe my valuation said that it was also 1.39 million. Too many zeros. Okay, and I'll pop in an effective date. So maybe I want this for 2022 financial year, and I obtained it about 2 days before. The type is trustee valuation. You can also select any other ones from here. If you have a supporting document as well, you can upload and store it on class. That's my valuation for that I've sourced from trustees. So I'm going to go ahead and save that now. So that's it updated on the system. Again, you have up to 3 free valuations for residential properties. So if you have any more that you need to request, reach out to support team and they can request additional valuations for you. And that concludes property valuations. So next up, we'll be working on a property sale. So like in your property purchase, you still need to process a deposit and settlement event when processing your sale deposit, but you need to make sure that you're completing the remaining amount in order for it to flow through to your settlement event. Okay, so again, with your settlement event, make sure that your remaining amount is correct according to your deposit event, but these are just the steps to get there. You want to select investment sell instead for a property sale. Now, if you're using a depreciation worksheet with the property sale, there's just one additional step that you need to complete, and that is to click Sell All on your worksheet. That little Sell All button will appear on your depreciation schedule, and it's triggered after you've completed your sale deposit and your sale settlement events. This is a very important step when you're using the depreciation worksheet because what it does is it will allocate the property cost to the proceeds to facilitate your CGT calculation in your realized report. A common question that we get is why the CGT calculation is not being picked up, and this is generally the culprit because this last step hasn't been completed. While on the topic of CGT calculations, I won't go into detail, but we do have a recorded webinar on property CGT calculations for properties with CGT relief. I recommend reviewing this for any properties that might be affected. Now, with your property disposal, you might have a property that has a settlement event on a later date than the deposit, but you might have some costs you have to capitalize. So if you process this with different dates, so your deposit event and your sale settlement event, you might find that the capitalized costs don't flow through to your realized report. And this is because the property is considered sold on the contract date according to your deposit event, but the capitalized selling costs are only brought in from the settlement event. So to work around this issue, depending on which depreciation method you're using, if you're using depreciation worksheet, you just need to adjust the dates of the fixed assets you're using to the day before the contract date and then click that Sell All button. Make sure you're clicking that Sell All button when you're using the worksheet. If you're using manual depreciation, you can use the contract date for your sale and your settlement event, but perhaps for the capitalized cost, you can process these as capital improvements to a date prior to your contract date. Now with that, I'll go ahead and show you what a property sale looks like in class. So in the interest of time, I've also activated and processed the transactions ahead of time, but I'll go through quickly and highlight the important points. So because it is a property sale, we want to start on fund level, and we want to go to transactions, investment sell, and we want to click on property sale deposit to first process our deposit event. So it's quite similar to the purchase deposit. So I'll show you what that looks like in my event that I've already prepared. So in my sale, my contract date is the 3rd of August, and I've input that there. My deposit paid was 50,000. The remaining amount is 100,000, and the sum or the purchase price is 150,000. So I'm quite happy with that. I'll click submit. And now because we've processed our deposit event, we can process the settlement event. So again, we want to go to transactions, investment sell, and we want to go to property sale settlement. In here, you want to select the property account that you're processing, and it will bring in the events from your deposit event. So I'll go ahead and show you what that looks like in my settlement event here. So I've selected my property account. It's picked up my deposit and my remaining amount from my deposit event. So it's picked up my contract date. And if I try to adjust the remaining amount, again, I can't because this is locked to my deposit event. All I need to do now is input the settlement date. This is one of those miracle properties settled on the exact same date. So I will now go ahead and review. So I had some sundry expenses that I need to pay up at settlement, and I've gone ahead and add these using the disbursements down here. But that's pretty much it. I'm quite happy with that. Again, use this opportunity to capitalize any expenses that you need to according to your settlement. I'll go ahead and submit that now and close. So I'll match these off to my cash transactions as well while I'm here. So I've got my sale deposit. I'll match this off to my sale cash match. My sundry expenses were paid in a separate transactions, but they both were paid at settlement. So I'll match those two together and match it off to my business event. Now, I'm using a depreciation worksheet, so I have that one last step, which is to sell all. So I want to go to investments, click on depreciation worksheet, and then I want to click on my property account. Now I did sell this property in 2023, so I'll click on next financial year. So this is what it looks like, settlement, and it's now picked this up, and it's got that nice little sell all button here, which I will click. Click yes to confirm. And we know that this step is complete when this residual amount has gone to nil, and you'll notice the termination value is now recorded here. You can take this opportunity as well to run a realize report just to make sure that it's picked up your calculation. But in the interest of time, I won't be running a report just yet. Okay, and that concludes our property disposal. Moving on, it's time for a crowd favorite with property processing across financial years. Now, it's not uncommon for properties to not settle on the same date unless you're as lucky as I am with having your properties settle within a day or within the same day. So it's not uncommon to have them settle on the same day as contract, let alone within the same financial year. So to avoid that, or to avoid the unsettled trades that might come from this cross-year processing, we have a workaround in place which involves introducing a custom holding account, park your deposit event, and any other transactions that take place in the first year of the purchase or the sale. In the second year, you'll clear that custom holding account and match it to the deposit and settlement business events in the second year. So you've seen in previous demonstrations how to process a deposit event and a settlement event, but there's an extra step involving the custom holding account. So there's also reference to a depreciation worksheet, and the purpose of that is to bring in the correct CGT date. I've included the Help Center articles for a purchase and sell across financial years, which cover the step-by-step on how to process this, but I'll also go through a demonstration shortly. Before I get into our demonstration, I just want to note what this looks like if you have sorry, if you have any GST involved in your transactions, maybe you've got a commercial property that you're buying and selling across financial years. Depending on when you want to claim the GST, you can bring this in using a GST paid or a GST received events for the buy or sale. And I've just included here how you can get there. So for a property purchase, you can go to transactions, investment buy, GST paid. Maybe you want to claim the GST in the first year the processing. So you can use this event to bring it in, and it'll bring it in as a debit transaction for a buy. If you're selling and maybe you want to claim the GST in the second year when the sale settles, then you can use this GST receipt and it will appear as a credit transaction. In my screenshot here, you'll see that I've got what each of these figures represent when you're using these events. So in a GST paid, and it'll be the same in a GST received, the claimable GST amount will be the amount that you want to be claiming in either year one or year two. So you'll input that figure in here. And what the system will also do at the same time is it will try to calculate what the gross transaction amount is, so the gross amount of your GST, because it's trying to calculate what it is. So here you want to make sure you update this figure to match your claimable GST amount. This will be what flows through to your activity statement report. So just make sure that these are matching in case your activity statement report picks up a figure that's not quite right. You want to make sure it's according to this figure here. Alrighty, let's get stuck into our cross financial year processing. In my example today, I will be doing a property purchase across financial years. So let's go first to the transactions so I can show you what transactions I've got so far. And again, in the interest of time, I have pre-prepared the fund and the transactions, but I'll show you setting up the custom holding account and what that parking process looks like. Okay, so you'll notice here, I've got some legal fees that were paid in the first year for 2,500, and they were paid in July of 2021. I also paid a deposit in the first year for $50,000, and that was paid as well in July 2021. You'll then notice that I've got some cash transactions for stamp duty paid in the second year, as well as the remaining that was due at settlement for 450,000, about that figure. And both of these are in July of 2022. So my first transactions take place in 2022 financial year, and then the settlement takes place in 2023 financial year. I'm going to go ahead now and show you what that looks like setting up your custom holding account so you can park those first year transactions. So we want to go to investments because we're setting up a custom holding account, and then we're going to select custom holding account because that's the type we're using today. So I'm going to pop in a code, again, free text field, make it unique in the fund. Description, free text field again, but this is how you want it to show in your reports. So maybe I'll call mine property across financial years custom holding account. In your GL classification, you just want to set this to sundry assets, and then the remaining fields will fill themselves up. And I'll activate that now. So now that we've activated our custom holding account, what we want to do now is park our first year transactions. And what that looks like is I want to go to transactions, browse bank statements, because this is how you can view your custom holding accounts. From my drop-down menu, I want to select my custom holding account. And if you recall, there were two transactions paid in the first year. It was my legal fees of 2,500, and then it was my deposit of cash-in transactions to my custom holding account because it will hold it in the first year, 2022 financial year. So I've got my legal fees, and that was for 2,500. I've got my deposit, and that was for $50,000. Okay, I'll save these transactions. All right, now if I go back to my match transaction screen, we can now match them off and essentially park them in that custom holding account. So with my legal fees, I'll match these off to the actual cash that was paid in year one, and I will match. And then for the deposit, I'll match it to the actual cash paid in year one, and I will match that now. I'll show you what that looks like in the balance sheet, because what we should see is the sundry asset account in the first year, but then in the second year, we'll have the property settled. So I'll go ahead and update this now. And what we're looking for is our sundry account, which is, yes, property across financial years. And it's the sum of my transactions that I pay in the first year, so my deposit and my legal fees. So that looks good. Now, when it comes to the second year and the property is now settled, what we need to do now is process our business events and match those off to the parked transactions in the first year, and then the second round of transactions that were paid in actual cash in the second year. So I've gone ahead and processed my deposit event here, but I'll show you quickly what that looks like. Okay, so we've got all of the relevant fields, remaining amount, deposit, etc. And because we've got that present, we can process our settlement event as well. In my settlement event, it's picked up from my deposit event, the contract date, remaining amount, purchase price, etc. But I've put in the settlement dates as 1 July. The idea is you want to clear out the property settlement as soon as possible in subsequent year. So as well as that, I've processed some expenses that I needed to pick up. And I've also capitalized my stamp duty and legal fees. I'm quite happy with that, so I'm going to submit my business event. And now, because it's in the year that the property is settling, what we want to do is clear out the custom holding account and settle the property. So I've processed my business events, but I'm going to go back now to my custom holding account and do cash out for these two part of my property. So I'll add transactions for 2023 financial year to clear these out. And I'll clear out both of these. So I'll just call these clear CHA, and it's for the total over here of 52,500. And I'll save that now. Okay. So what we've got now is it's just a matter now of matching the transactions. So part of my deposit was paid in here in the first year, so I can match that off. It's partially matched because I also had some legal fees, but I'll now go ahead and match all of these that were paid in the second year to my settlement event, which matches off nicely. So I'll go ahead and match those now. And now that it's settled in 2023 financial year, I'll show you what the property looks like all settled and cleared. So we want to look at 2023, close that. And we should see two things. We should see that the sundry asset account is cleared with nil balance. And then we should also see the total value of the property now in 2023. And this is my property. So cross financial years, this is the one. And if I search for my sundry account, it doesn't appear because it was cleared out after I finished using it for parking my transactions. If you're also using a depreciation worksheet, take this time as well to just, actually one of the steps was to use the depreciation worksheet to bring in the correct CGT date. So now that we've processed our property buy, all of these items have now been picked up in our worksheet to add. So I'll go ahead now and pick up the purchase cost, and I'll change the CGT date because this was actually to whatever the real CGT date will be. Okay, so you can use the depreciation worksheet to bring in the correct CGT date that you need. I'll bring in this. And then last figure, according to your contract date. Okay. So that has now picked up the correct CGT date. Our balance sheet is showing the property settled in 2023 financial year. And that concludes property processing across financial years. I hope you found that helpful. Thank you so much for joining today's session.